So promoted markets to Sahura with Federal Reserve meeting review and market reaction. As you know, Federal Reserve, or in more detail, the Open Market Committee of Federal Reserve had a monetary policy meeting and interest rate decision last night, which is finished actually last night in European time. These meetings usually takes 2 days, started on Tuesday and ended on Wednesday evening in European time. What happened there? I have to say that the first meeting of 2025 was the first meeting of Federal Reserve in this period after Mr. Trump administration also started its work in White House. With what happened in the last 2, 3 weeks, with the comments that we had from FOMC meetings, with the FOMC members, with the economic data that we had, generally, these data made it more clear to say what we can expect from this meeting. That's why this meeting, or the first meeting of 2025, was the most predicted meeting of Federal Reserve that we had recently. Fed hold the rate. That was widely expected. More than 99.5% chance for holding the current rate. Federal Reserve, or we can say the Fed Chair Powell in more detail, emphasized that the labor market is strong. U.S. economy increased more than gained more than 2% in 2024. Unemployment rate at 4.1%. Inflation at PC price index around 2.6%, and core PC price index around 2.8%. All of these numbers, they confirm that the U.S. economy is strong and inflation is under control, and the markets also believe that the Federal Reserve can control the inflation further. So that was what the Federal Reserve said about the Fed relation with the new administration. We had no surprise. The questions that they were about the Fed reaction to the Mr. Trump's call to cut the rates. Mr. Powell said that we follow the rule, and the Federal Reserve is trying to control the inflation and increase the work on the labor market. So support the labor market. So we are following our 2 mandate that we have. We don't check what we don't go after just like public conversations. This is private stuffs and the economy. I mean, no surprise. We were waiting for such answer. Also, about the further rate cuts, Mr. Powell had no sign about the further rate cut, confirmed it, as always, that the Federal Reserve will follow the data. And with the data that we will have in the next months, we can decide what to do. And this data will be the key to go further. So generally, we can say that the Federal Reserve had no surprise in this meeting. No surprise at all in this meeting. Everything in the decisions, in the statement tone, and the outlook, everything, they were exactly how we were expecting. So that's why the market reaction also had no surprise. If let's go and check the charts and see how the market reacted to these data. We can start with US dollar index chart. US dollar slightly increased and then fell and then again increased. Just like very light reaction. As I told, we had no surprise. Since we had no surprise, the market also already everything was priced in the market. So no surprise in the data, no surprise in the press conference, no surprise in statements, made no surprise in the market movements as well. US dollar kept its strength. Still is strong, and we expect to see the slight movement with slightly uptrend tendency, just like slightly, not such a big, but because this decision of holding the current rates for longer and the policy of mentioning this is the right now our policy, the Fed policy is the wait and see. These means that the Federal Reserve can hold the current rates for longer, and all of that means that we can now expect the US dollar to be able to confirm and hold its gains. Holding the current rates for longer is not such a good news for stock markets. With what happened with the dipstick R1 in the last days, and there's so many investors right now, they have a doubt that maybe stocks are overpriced, and especially the tech stocks are overpriced right now in the market. So while if we say that okay, the tech stocks are overpriced, and there are doubts about that, so more outgoing money from the market is what we can expect. More outgoing money or money flow out from the stock market, in line with the current hawkish decision and tone in the stock in a Federal Reserve statement and press conference generally. Actually, that was hawkish, but it was expected. Generally, we can say that for now, even until later, even if we have more positive earnings from the stocks, from the tech stocks and tech companies, still we cannot be so much positive about market reaction. Yesterday, Microsoft and Meta platforms, they were both better than expected. Even thought that Tesla missed the expectations, but Meta, T-Mobile, IBM, Microsoft, and all of them, they beat the expectations. We expect the Apple also, which will have the new Apple, Visa, and Mastercard, which they are going to publish their earnings today. All of them to also could be able to beat the expectations, but still the market cannot have such a good and positive reaction to these earnings as holding holding the rates for longer means more pressure for the stock markets, in line with the recently changes in the stock markets, especially in tech companies with what happened with the dipstick R1 version. Don't forget that the Chinese markets and Chinese economy is in New Year holiday, and they're going to start on Monday. So from the next week, most probably we can have more pressure on the stock markets with what's going on. It won't we expect to go further in the Chinese markets. If to go to other markets, we can say that these changes are positive for gold market. So that means that the more money goes out from the stock market. So that's why we can expect gold and US dollar as a safe haven to have more demand. So therefore, that decision can be positive for gold, but at the same time, it's not such a good news for oil. Oil price can be under pressure. However, since it's a winter and a cold winter, we need more energy. That's why we cannot say that can be such a big fall in in energy prices, but still it's not a positive, it's not a good and a positive for energy markets. As for cryptocurrencies market, the only thing that the Mr. Powell talked about the cryptocurrency was that we need more regulations in the cryptocurrency market to support especially the retailers. So that's why we had nothing negative about the cryptocurrency. So this short sentence also could be read as a positive in a cryptocurrency market, and it can support the prices how it's supported already. So for now, there is nothing negative for the cryptocurrency market, and it's as a positive. So to reminder again, that was a negative for the stock markets, holding current rates for longer with the doubt about the overprice of the stock market in the tech companies. Negative for the WTI oil price as the lower less improvement in the stock markets, or it means that the lower demand for energy as well. So generally, it's not a good for energy market, good for the crypto for safe havens, including the gold and US dollar index. That was what happened in Federal Reserve meeting and market reaction. If you had any other questions, don't forget to write in the comment section. I'll try to get back to you as soon as possible. Have a good time. Bye-bye.